Welcome to the PropLinq AI podcast, where we talk to founders, operators, and investors reshaping the real estate industry and other markets with technology, capital, and strategic vision. I'm Stuart Quintal, the founder of PropLinq AI, an AI agency helping property businesses modernise how they scale, automate, and operate. Today's guest is Sachit Rajan, a venture partner across two US-based VC funds, Network VC and EREZ Capital, collectively managing close to 300 million in capital. Sachit brings a truly global lens, operating across fintech, emerging tech from the US to Australia, and backing companies in AI, Web3, crypto, and other assets. Sachit, great to have you here.
Thank you so much for inviting me to this podcast. So lovely meeting you and your viewers. So excited to get started. Yeah.
Well, I'm quite excited to have you on because I haven't had you're one of every founders and startups' best friends, a VC, I guess. So let's start with a bit of your story. How did you get into venture capital and what brought you into the tech investment world?
Well, I think just to give a background, I mean, I obviously was an entrepreneur for most part of 20 years, which actually helped. I built a company which is essentially a fintech company in the space of debts and credits. So a product which I took it from ground zero to building it across different markets. So I went through the entire journey of scaling up a company, faced the challenges, failed a few times, finally got successful. So I think during this journey, I think I got a chance to come across a lot of other startups and was able to work in with some of them to help them navigate this journey. So I think that was a starting block. I started kind of enjoying that experience of working with other startups because I got a lot to learn from a lot of new founders who came along. And I think that was the foundation, which then led me to eventually looking at it in a more professional startup environment through VCs, which I started somewhere about 5-6 years back with Network VC and EREZ Capital. So I think that's how I stumbled into it. I think one journey led to the other, one experience led to the other, and I think I'm still learning. Excited about the prospects and excited to work with a lot of smart young entrepreneurs. I think that's something which keeps me going every morning, is the excitement to learn something new from great guys around.
Now, you're involved with two funds. Can you walk us through the differences or focus areas of each?
Well, the first one was with Network VC. The background there is started about 2019, right when COVID hit. And I think we as partners sat together and quickly realized that the world post-COVID was going to be different. I mean, none of us knew where it's going to end. None of us knew at that point where it's going to be all in terms of technology, what's going to be the new developments. But I think we all knew that the world is going to change forever. And so we wanted to look at companies which would really matter in a post-COVID world. So that was a thesis. We worked around that thesis and we picked up industries which we need to focus on and started building on that thesis. So that came around in 2019, 2020, where the focus was we would look at Internet of Things. We would look at AI was just about getting started, so we knew there was something happening there, but we really didn't know where it's going to take off, what's going to happen. We started looking at blockchain, crypto, Web3, all these things which really going to matter because that was our thinking. And rightfully so, over the next few years, these things really came into full swing. And so when we launched the second one, EREZ Capital, it was really focused on AI. One of the things which was core pillar was AI. Now we started it about 22, 23, and by that time things had really come clear what and where we're heading. So the second fund with EREZ Capital was really focused on AI, machine learning, and those kind of things which are going to really make a lot of impact. Um, Again, EREZ is very diverse in terms of it looks across AI and capabilities across different verticals. So it is not really specific to any particular industry. Whereas when we started Network VC, it was more technology focused fund. So by and large, that's the difference. Of course, with EREZ, it is more worldwide. They've started looking beyond US because again, when we started 2019, it was very US. All the startups, everything, all the action was still in the US. But I think the last couple of years with EREZ, we've started looking beyond Europe and Middle East. That's why I spend a lot of time here and other regions.
Now, I guess you sort of mentioned you're tech first, but not vertically limited. What are the key technology categories that you're most bullish on right now?
Well, I think what I'm bullish on, I think really one area which is really going to change in terms of AI and tech is fintech is really going well. I have to say that there is excitement in the real estate space, but we're still figuring out what's going to happen there. There is a bit of unknown there. I see a lot of development in biotech, which is really going to kick in. And climate tech is going to be a big one. So I think these are the emerging ones which I think which technologies are going to adopt in the next year or so. And we are excited as a fund to look at some of these companies which are coming up. So on pharma, bio, life sciences, when I say biotech, essentially I cover these things. And then, of course, as I said, green energy storage, these are some markets which I want to look at. Fintech has been stable now, but it's always been there and is a proven model. And we know what's happening and what's capable. We know the risks, we know the scalability, we know how it works. So, but these are knowns, so that's exciting.
I mean, you talked about some of the knowns, from a business category, I guess, especially the fintech, that there's some understanding of those business models. But are you seeing any trends in the founder behaviour or the product models post COVID that are shaping the way you deploy the capital into some of those unknowns or some of those new areas?
I think from a deployment of capital, let me just say from a funds perspective, where we look at depending on which part of the journey the startup is. I think before in the last few years, let me just put it this way, as we see when you are pre-revenue, you are really focused on, and you have not yet launched your MVP. I think as a VC, we are much more glued on to what the founders are, what their vision is. I think that's become an important piece when you're pre-revenue, or that's become an important piece when you've not tested the market with your product. I think because there's been a lot of churn, there's been a lot of people have lot burnt their fingers with investing behind their own founders. So I think for us that's been a bit of a learning ourselves, and so that's something which has really been important. Second, of course, when you are really at MVP stage, then we are really keen to look at the market feedback. Forget the scalability, forget other things, but I think the market feedback and the response and what you've done about the feedback is really an important criteria now. So I think these are some changes which we are really seeing in terms of behavior, in terms of how we look at startups, and I think the startups have also reciprocated in that manner. I think there's more clarity in founders what they want to achieve. Their business plans are much more clear. The MVP, what they want to achieve, they don't want to do 10 things. They're very clear that this is what I want to achieve with the MVP at this point. So there's much better, clear milestones for a VC to understand and take a call. So I think it works both ways. We've set the expectations, and the market has responded accordingly, if I have to say.
I guess from a conviction of investment or a conviction in like founders pre-revenue versus MVP, what are sort of the areas that guide the business? If a founder is targeting a niche um, versus a huge category, how does that sort of play into
I think
the thesis?
again, we as a VC have also grown to understand this. Earlier, it was purely the total addressable market and serviceable market kind of a thing, which typically was very important to understand whether the business is scalable and what length of scale it can achieve. But I think on that side, I think somewhere niche markets got lost out. And I think while niche markets and localized markets also are very important. So when you talk about, let's say, Middle East as a market or Arabic as a market, it may be a bit limited, but I think there's a lot of potential within localized markets where scalability might be just a bit limited. But I guess there's a lot of potential there. So low income countries, there's a lot of potential. Scalability might still be a challenge, but if there is a great innovative product it's an amazing thing. Like we're looking at some products on low income housing in some countries, which is an interesting thing. I'm talking specific on real estate in this case, but uh, so yeah, I think the shift has happened. If I have to say, it's no longer a total addressable market and serviceable market. It's not the Toms and the Sams which will kind of take a decision for investor, but it's really about how localized and how niche your product is can be, and whether you can capture that market specifically.
Now, you mentioned that crypto and Web3. Are you currently invested in any crypto Web3 projects?
Yes, we have just again just beginning to see some action in that ground. We've invested in a couple of them, but again. For also it's a learning for us as well to see how these companies perform on their products and market growth and expansion. But yeah, to answer your question, yeah, we've done some
Yeah,
investment.
I mean, at the time of recording, where Bitcoin's now at an all-time high, but I guess sort of trying to understand where younger users may be transacting in crypto instead of traditional finance. Is there a trend that founders should be designing for now?
Absolutely, there's a huge swing. I mean, I'm specifically speaking of some industries like gaming. We've seen a lot of usage and uptake on crypto take up, And again, I'm just discussing it straight away. But for example, I see a lot of traction in crypto in some markets like China, which is a huge swing. In fact, a lot of the gaming companies are going for crypto first, not yet. Um, so that's a massive shift, and I think it's set to boom. I think the community is growing. I think this is all a lot community driven. But I guess with youngsters coming in, there's a specific traction on certain segments of esports and gaming, which we've invested in. That's why I know that. And there are markets and countries which are heavy on cryptos, adopt crypto. It's a bit regulatory driven, and that's a challenge I feel sometimes. But I guess countries which are open to that have seen a huge surge in terms of people taking it up. So I guess that's how the challenges are, and that's the opportunities also. So
Looking ahead from a horizon perspective, I know from a fund perspective, are you a 10-year horizon with most funds, or but also from then deploying capital? What excites you most in the next 12, 18 months in tech?
well, I've seen a lot of interest sitting here in Dubai on tokenization. I think that's something which I'm excited to see where it goes. Um, I think still early days in that market, and people are still figuring out how to tokenize and what all can be tokenized successfully. But we've looked at one or two companies in that space, and I see the potential is huge. If especially something happens in the real estate space, and if it can be done successfully in that space, so that is interesting space as I see, which is uh, looking great. I have. I'm a lot excited about North Africa and markets as well. I think coming back to your earlier question around niche segments, I think some of the niche segments, whether it is agri tech or you're talking about climate tech or any other things, some of them will have a great opportunity to take off there. Even fintechs, a lot of opportunity in these markets. So,
Yeah, I mean that's one of the areas of the world that the population is growing and is underserved.
yeah, certainly.
Are there any other sectors or founders that you're especially keen to back, or any red flags that you're seeing too often?
Those, which we are looking to, I think EV as a space, we're looking at founders in that space. To be honest, that's something which we feel we've ourselves not done much in backing some of those companies. I'm not talking about our funds, but a lot of the funds have not really done enough in that space, and we know that's going to be an important thing in future. It's an absolute no-brainer. So what comes and what we can do in that space is something which we are aggressively looking to back. So yeah, I'm always looking for companies which have something to offer in the space of EVs. So
Um, if you could solve one big challenge for an early stage tech founder, what would it be?
well, one big challenge which in terms of technology, this how do you build a scalable technology? That's something which I found, or rather, I find founders struggling to grapple with. You were able to get to a certain point with what you built, but how do you build in scalability to your product in terms of different scenarios, different markets, or different segments, or different portfolios? Is where I think a lot of the challenges lie for founders who are looking to just grow. And that could be challenges because of, it could be regulatory limitations, it could be geographical limitations, it could be uh, social limitations. It could be a lot of them. But I think there lies a lot of challenge in terms of scalability from, especially when you just launched your MVP, you just revenue, and you want to get to your Series A, B. That jump is so difficult to make, and a lot of it boils down to your technology not being able to get to that.
I've worked in tech for many years. Ideally, like you see the startup phase, the MVP stage, you're developing for lean, you're developing for rapid feedback, you're developing for to pivot if you need to. Do you encourage founders to still develop lean or work lean until they've found a product market fit, and then look at deploying, for scale?
Yeah, absolutely. Yeah, I guess that's how it has to be. You have to keep it lean. I'm sure that is. It's a bit of a tricky thing, right? You
Sounds like a balancing act. Yeah.
it's a balancing act, absolutely. How can you achieve all those things? But yeah, I guess there's no other way to do it. But I guess you have to keep it lean and efficient. Have drive that so that you can pivot off and scale at the right time. Yeah, easy as it sounds, but difficult. I understand.
Yeah, it can be very challenging. I guess everyone wants to build a product for the millions and millions of users, and then
But I
the
guess
hardest thing was getting one user.
yep, I know, and that's why I'm so glad that a lot of the VCs are now looking and understanding that as well, which is why localized products and localized solutions seem to be taking off, as in market specific. That change in attitude amongst us VCs also have probably going to help in the future.
From a future perspective now, like how do you feel? Like how are you thinking about exits in sort of today's environment? Do timelines or paths look different now versus say 2-3 years ago?
Yeah, I think the timelines have changed. I think timelines today are more long term. I'm glad that is the case, because I think the investors have realized, the limited partners have realized, whether you backed by your family offices or whatever, everybody's realized that you really can't have a 5 year typical mindset, which used to be there going back a few years. If you need value, and if you want to create wealth, then I guess you have to be a bit more long term and a bit more persistent. So I think for us, even when we started off, we had a very 5 yearish horizon, and that's what we used to commit to our investors as well, or pretty much convince them about. But I think now we've also gone back to our funders and told them that you have to have a long-term view, which could be closer to 10 years. So I think that's changed for the good.
All right. Well, Sachit, it's been a great conversation, and I appreciate your global view and the balance you bring to between optimism and pragmatism in backing emerging tech. But before we wrap, where can people learn more about your funds you work with, or connect with you directly?
Well, you can connect with me at directly at Sachit at EREZCapital.io. That's my email ID. Um, yeah, and just drop in a line, and happy to catch up anytime on a call with you guys. So look forward to being.
And for our listeners, if you're building something in real estate or tech and want to scale faster and automate, thanks again, and we'll catch you next time.
Thanks, Stuart. Thank you for inviting me, and pleasure talking to you.